Okay, so now let's talk about the markets now. The stocks traded in negative territory at intraday session. And this just some few minutes ago, we saw that the NGX was in the red, but it has managed to go back into the green, and we see some oscillating in between the markets. So at intraday, this is the numbers here. First of all, we had that 0.26% pullback on the market, 242,749. 0.94 for the domestic stock market, while for the Johannesburg Stock Exchange, it was more than 0.5% shave off from the index that you see, the index number here. So, but for the Nairobi Stock Exchange as well as for the EGX, it's also a negative close, while for Nairobi Stock Exchange, as at Friday, this was down by 0.46%, but the point is having that the market is going to open in the green, and because of some investors' activity, positive buying sentiment from that market. Now, to give us some details about the domestic stock market, we have Abdul Rashid Moma, is the executive director and equity trader with TRW Stockbrokers. So, thank you for joining us, Mr. Moma.
Thank you very much.
Okay, so now my first questions, I think I have 5 questions for you. So what is driving today's movement in the Nigerian equities market, and which sectors are leading gains or losses? I've seen that market, there's been some movements there. So what is actually driving the sentiments as we speak?
Okay, first, I'm a technical analyst. I'll first give you what's happening on the floor of the exchange. In terms of volume, we're looking more of the banking, that's FCMB has traded over 115 million units, valued about 1.3 billion. We have Assets Corp. Assets Corp has traded about 13 million, which is about 341. Abe, Abe is the new kid on the block. They've gotten their commercial license, so they've traded about 21 million units, which is worth about 209 million, and TIP have done about 20 million, which was about 650 million. But, for some time, I think the most traded volume in the banking sector has always been Access Corp, but today they seem to be in the 4th position.
Okay, so now that takes me to my next question with you. How is investor sentiment shaping trading on the NGX, particularly in the banking, oil and gas, and consumer goods stocks?
Yeah, okay. Give or take, one thing about the NGX market. NGX market is more of momentum driven, apart from earnings in terms of what the financials are saying. If you look at the market in terms of figures, the whole of May, what the whole of May did was what in June, in 4 days, the month of June wiped out. In 4 days, June wiped out a whole month of rally, which we had in May. So the market seems to be touching a very strong support levels. The support levels is about 242,000 points. And that's when we saw a reversal on Friday. And we seem to be seeing another continuation of that reversal this week. So it's more of market in and out. When you've seen so much people sell into, there were a lot of panic selling last week, and we saw a lot of investors take advantage of that. So the market seems to be up now, and we're up by 0.51%, which is about 1,233 points as we speak.
Okay, so now you talked about that volatility in the market, and this is coming after the Eid holidays. We saw 4 consecutive days of negative trading last week, and just a rebound. So now, if I may ask, which stocks are currently attracting the highest trading volume or drop, and what is behind the surge or the decline in the activity?
As we speak now, let me say the whole indexes now, except NGX industry, are all in green as we speak. And as I've told you, the ones that are moving the market now as we speak, actually the banking sector, they're the ones at the top now in terms of volume. Most of the other stocks are actually in green, but we are not seeing much of full 10%. What we are seeing more is especially let's say the insurance sector, NGX, that's the only one that has actually made the highest gain for today. Most of the lows we are seeing in FTSE, Multiverse, Total, Okomu, but all we are seeing is traders are buying into the 10% benchmark, but the prices are not going to be 10% at the end of the day, because for you to move such stocks, you need at least 100,000 units for those stocks to move. So at the end of the day, I always tell people, buy into this weakness. Example, if you look at FTSE today, FTSE is trading about 136.50, but most of the sales, most of the purchases done has been done at 122.85. So that's already a spread for anyone buying into that stock. But those stocks are not going to drop, because they are stocks that are above the 100 naira mark, and you hardly see stocks on those volumes dropping easily.
I'm sure that some investors there might be taking profits aside from all the other factors. But now let's delve more about the Nigerian stock market. How resilient is the domestic stock exchange amidst the global uncertainty and commodity price volatility?
Okay, one thing you need to know, if you compare market on what has been happening, let's look at the market. I like to look at history. If you look at 2008, when we had the global surge in the stock market, Nigeria too followed suit. What really plunged our market then was a lot of investors were into what they call margin loans. The banks gave them margins. Even banks and insurance companies that came to raise money, most of those monies went back to the stock market. If you look at the market now, most of the funds we are seeing now are more of like the pension funds and everything. Even the individuals are not actually borrowing money from the stock. I mean, they're not borrowing money from the banks as we saw the last time, because what kills the market is, if as an individual investor now, I know I'm losing in the stock, either I sell at my own will or I wait for the losses to ease off. But when it comes to margin loans, they keep calling, you have to sell down or you cover those losses. So as we see, the market is not under any pressure, number one. Number two, if you look at in terms of financials, the financials being seen in the market, at least 90%, even 95% of the quoted companies that speak today are doing very well. So investors will prefer to wait for the next Q. Yeah, you are entering the Q2, the Q3, for them to know that, okay, at the end of the day, things are going to be very well. But to just summarize, the market remains fundamentally resilient. We may see, as we are seeing, we may see some short-term volatility as investors rebalance their portfolios. But in the underlying drivers, earnings growth, as I said, liquidity, and the search for real returns remain supportive. And the conversation now, less about whether to be in the market or more where to be positioned within the market. For us, I think the market is still going to be, this is just the beginning. The market is just taking corrections, and I feel with time we'll see the bulls resume.
Okay, Mr. Momo, I'm sure, I know that you're willing to give us more details about this market, which is one of the best performing around the world. But I'm sure investors are really taking your advice and really watching it. But so thank you so much for your time on the show, and we look out for a positive close for the very start of the second week of June on the domestic stock market. Thank you so much for your time.
Thank you very much. Yep.